Did you have to get a fake ID to go compete? You're what, 24, right?
Yes. Like you're going to be fine. As long as you don't do anything like obviously criminal, like just go build stuff. It's going to be okay. Like
we're going to be probably a little bit more afraid to do that, at least on Hyperliquid, unless they implement some changes.
I'll just say no crying in the casino.
What's this? What's the saying? Economists were created to make alchemists look good, or nothing.
Hello, everyone, and welcome back to the DeFi Podcast. Today is September 4th, 2025. We've been absent for a few weeks because it's the end of the summer and we all kind of, we're doing some random things. Personally, I went to Vegas and got my butt kicked at a jiu-jitsu tournament. Its official name is like the midlife crisis tournament. You have to be at least 30 years old or older to compete. And it was awesome. Dude, I went to Vegas. It's like this awesome jiu-jitsu like a big convention center thing, like thousands and thousands of people. It was really fun. But I got knocked out in the first round, which was humiliating, just absolutely humiliating. But anyway, so that's why we've been out for a couple weeks, 2 or 3 weeks. I thought JF and Rhett were going to do the podcast, but for some reason it didn't show up. What were you guys busy with? Tell me.
We're building $1 billion protocol here, so that's one.
You're doing that every week. What's the? I don't understand what the issue is.
Yeah. Did you have to get a fake ID to go compete? You're what, 24, right?
Yes. A little bit older. Yeah. The guy who beat me is, he was really good. He was really good, but he's definitely older than me. Is kind of humbling, like his jiu-jitsu was just really, really good. I have a lot to learn, so that was fun.
I kind of think it's good to go do something periodically that you're like, not great at, and then, learn to improve. I thought I was decent at squash. And then several years ago, I joined a squash club and I showed up to like the league the first week I was there and just got crushed by, a woman that was like 20 years older than me. And I was like, I'm not very good at this. And I was like the worst one in the whole club for, 6 months. And it felt good to be like the worst one there and like, having to learn,
But that's not what you've been doing for the last couple of weeks, right? What were you doing for the last couple of weeks of the summer? Anything interesting?
Just working. I do a roommate reunion with the guys that I was roommates with when I lived in kind of the San Francisco Bay Area up in Idaho every year. Super fun, actually. I'm the only one of them that's not married, and they all have like 3 to 4 kids each. So it's a full house, super fun. There's horseback riding and pool time. We did some pickleball tournaments. It was awesome.
Okay, so you're kind of like Uncle Rhett, who's in crypto and still living the DGen life, basically, right? Yeah. Cool. Jared, what about you? What have you been up to the last couple weeks?
Nothing fun and active like Rhett. I've mostly just been head down working. I've been delving into the fun world of MEV and trying to wrap my mind around that.
Oh, very cool. On any specific area or?
Specifically the Avalanche ecosystem. It looks like it's either getting harder to do and less competitive to do at the same time. So some interesting moves being made on Avalanche right now.
Well, I've seen that a lot of inflows of stable coins into Avalanche. There's a lot of TVL coming in. I'm not sure. And there was obviously a ton of volume with this new DEX called Black Hole. Anytime there's like a new DEX and a ton of volume in emissions, like I'm sure MEV opportunities probably like,
Surprisingly, MEV opportunities on Avalanche have been historically low in terms of potential, profits that you could walk away with. So that's surprising.
Yeah, I think generally MEV over time, like available MEV over time has trended down. There's a lot the app builders and users can do to mitigate. And then even just chains getting more performant helps as well. But it does, all else held equal, MEV scales, my understanding of scales like quadratically with like volume and bull market, like a lot of price movement. But I'm not super surprised by that because as the chains get better and as the apps and users get more sophisticated, I think it will just kind of squeeze down over time.
Yeah, that makes sense. There's also been a huge movement of the number of validators on the chain. It was recently up around 1,400 total validators for the Avalanche C chain, and now it's like around 900 right now.
That's for the primary chain, right?
Yeah.
Yeah. So I wonder if they include like all the L1s together, what it is. It's probably well over 1,000,
Yeah, for
but
sure.
yeah, I hear what you're saying about the primary chain. I mean, obviously I think part of that is Gogo Pool's moving, from one, like Gogo Pool's vision of, they're basically helping validators launch at a cheaper cost changed a lot after ACP 77. So that's probably part of the reason why it's trended downward on the primary chain too. But anyway, okay, let's move on and just do like a quick market update. There's really not that much to talk about. 3 weeks ago when we chatted, I think Bitcoin and ETH they had basically just touched all-time highs and people felt really good. In the last 3 weeks, we've kind of drifted down a bit. I think both BTC and ETH are about 10 to 15-ish% below the all-time highs. A few altcoins have done really well. I think the standouts are really like these exchange coins like CRO and OKB. We'll talk about that later. But the big news actually that happened was that at the end of the summer, every summer, the head of the Fed gives a speech at Jackson Hole. And this year at Jackson Hole, Powell gave a speech where it was surprisingly dovish. He basically gave a clear signal that the Fed is preparing to cut interest rates, which marked a pretty big shift towards easing monetary policy. He emphasized in the speech that the Fed's approaching their 2% inflation target. And the important quote, I'm going to quote it here exactly. It says, in the speech, he said, the upside risks to inflation have diminished and the downside risks to employment have increased, which is Fed speak for basically saying that they're going to focus to supporting the labor market. And immediately the price, like the expectation for September rate cuts went to like 25 bips of rate cuts. So I think that meeting is in 2 weeks. Yeah, 2 weeks from yesterday. So we'll see what they say at that meeting. I mean, basically the market is pricing, they're going to cut by 25 basis points. And now the question is like, what are they going to do in November and December? Right now in November, we're pricing in like 12.5 basis points of cuts, which is basically like 50% of one cut. And then in December, it's like another 25 basis point cut. So what's really important is in 2 weeks, what do they actually say about the rest of the year for rate cuts? And then the next story is going to be who's going to be the next head of the Fed, because that's going to set expectations for monetary policy going into next year and beyond. So really,
I have a quick question on this topic. I'm curious, you sort of follow these markets and, having worked on Wall Street, I think you follow them a little bit more like attentively than the rest of us do. Just curious if you think that like the last, let's say 18 months of Fed policy has been dictated more by politics or by actual economics. Do you have a view on that?
Yeah, I mean, look, they're supposed to be apolitical, right? And I mean, to be honest, like Powell gets a lot of because he did get some things wrong. Like he he cut interest rates and did a massive amount of QE and really did not start raising rates fast enough. Like they kind of missed the boat a little bit and then they had to hike rates really fast. So he made some mistakes. But I mean, when I hear the guy talk and I listen to his speeches, I do think the guy does try to be apolitical. I have no reason to think that he's being political. But I mean, look at the Fed. Like, what did they do, right? Like they hiked rates really fast to 5.25% when they had to, when inflation seemed to be persistent. And then right before the election last year, they cut rates a few times, right? Which you look at that, it's hard not to think that they're being somewhat political, trying to help the party that's in power, right? Because if they cut interest rates going into an election, like it's supposed to bolster the economy. And if you're bolstering the economy, you're probably trying to help the administration that's in charge. I mean, I don't know. It's hard to read into like exactly what these guys are doing, but people who say that they're being political, I mean, I can see their point, right? I can see the point they're trying to make. I mean, also like Washington, D.C. is like the most liberal bubble in the entire country, right? Like I think 95 or it's something stupid, like 98% of Washington, D.C. residents vote Democrat. So any organization that's centered in D.C., you have to think is being influenced politically and to the left. Like it's hard not to be suspicious of it.
Do you have a sense that like this is the general sort of perspective on this in, let's say, high finance in New York?
Yeah, I mean, people are, I don't know. People on Wall Street have all sorts of opinions. Like you'll find people who, you have this opinion. You'll find tons of different opinions. I don't know what the right answer is in terms of like what's the average opinion. I don't know.
Here's a good question for you, Bill. And the Fed, yes or no?
And the Fed. I like the sentiment. I like because look, the Fed has an impossible task, right? Like the Fed, basically what they do is they set the Fed funds rate. That's what they do, right? They don't control interest rates along the entire interest rate curve. They set the Fed funds rate. That's what they do. And then that Fed funds rate like seeps into the rest of the interest rate curve and then the broader economy, right? And so if I asked you guys, like, look, what is the quote unquote correct interest rate to set for the Fed? What is the answer to that? There is no correct answer. It's an impossible task, answer, right? Well, hold on. Let me just finish this.
The Fed should not exist.
Well, okay. Yes. But if you were to just dramatically like end the Fed today, I mean, it'd be turmoil, like pandemonium, right? Like, so what I'm actually for is let people who are in crypto experiment and innovate, because eventually they'll come up with a way to separate the money and the state. That's how I feel. Like, you know, in terms of managing a fiat currency, the United States does better than other countries. Like, I mean, I grew up in another country, right? I grew up in Turkey, where at some point, like, we were walking around with, $10 billion notes. They had to lop off 6 zeros from the currency, and they had to do it again, like sometime later. So every country out there in the world is inflating away their currency. Instead of solving difficult problems, they just print money. They just expand the money supply. And we are no exception. The United States is doing the same thing, right? But at least in the United States, we have a bunch of other things going for us, namely freedom. Like, mostly we're pretty free to do what we want here. So I think that freedom should extend to crypto. And then hopefully over time in crypto, we're not there yet, but hopefully we find a way to, create a meaningful store of value that can't be inflated away by bureaucrats. But until we get there, you can't just like abolish the Federal Reserve. It would be pandemonium. So anyway, that's how I felt.
Yeah, if you were to get rid of it, the pathway to transition seems hard. I think one thing I've heard is a view proposed by Milton Friedman is you just like automate it. Basically, you say, hey, here's like, here it's just going to like have a couple of targets that just like a computer runs it, essentially just rules based. That one's interesting. If you removed it entirely, I think one of the best arguments for removing the Fed entirely, like the transition would be hard, is price controls or like price fixing create distortions. So, you go and set some price floor or ceiling on like milk or eggs or something, you're going to create all these distortions in behavior. But if you manipulate interest rates, that's a price too. And interest rates kind of coordinate time preferences of money. So if most people are saving and investing their money, interest rates go down, businesses can borrow that money and invest more in like future production. If people are wanting to save less, then there's just going to be more like current production of things. And so it's like this, it coordinates time preferences, and by having that knob turned by the Fed, you could say is distorting those things. But the transition would be really hard, I think. On a couple of other quick notes, I think this is pretty obviously good for crypto. Crypto loves liquidity. I'm not sure how much is already priced in, because crypto has been doing quite well recently, and probably like as Bill noted, when that conversation was had after Jackson Hole, rates went, or crypto kind of started performing better. So who knows how priced in it is, but I think it'll be good for crypto. I'm really curious to see how it impacts the debt service burden of the U.S. I think we're in a true debt crisis, and if rates come down, the U.S. issues a bunch of new debt. Does that help mitigate some of the deficit issues? I don't think that that's a long-term solution, but in the short term, maybe it helps a little bit.
Yeah, question to the panel, sort of in parallel to what we're talking about. What would be the optimal inflation rate?
This is exactly the issue, is that there's no way for us to really know that. Like, what do you even mean? What is the inflation rate? I was talking to someone.
The target's always been 2%, right? And actually, I think like a lot of people don't know where that comes from, and we're not sure if it comes from any even like sort of like reasonable assessment of what a good inflation rate should be.
That's right.
But, should it be above 2%? Should it be 2%? Should it be 0%?
This is the problem, right? Like macroeconomists, like, dude, this is the issue, right? Macroeconomists are not scientists. They're just politicians masquerading as mathematicians. Like, it's just garbage science. Like, it is, it's just politics. So this 2% thing, like, who knows how to do, like,
what's this? What's the saying? Economists were created to make alchemists look good, or
I haven't heard that, but dude, I mean, they basically can just say whatever they want to say. They come up with no falsifiable statements. They can't predict the future any better than anyone else, like in terms of where the economy is going to go. So it's just useless. Like, what is inflation really? Like, and what is it that you're optimizing for? How do you have a group of, small group of people who live in Washington, D.C., like choose the correct rate? Like, it just doesn't make any sense. Like, why not have them sit around and come up with the correct rate for a house that you want to buy, or the correct price for a house, or a correct house? Like, they don't know. They just let the market decide.
It strikes me as funny that there's even a debate around that. If you were to start from first principles and not have this previous notion that there should be inflation, would the inflation rate not just be deemed, like the optimal inflation rate, not be deemed to be just zero? So, or potentially negative, right? Ideally, there's a fixed sum of money, and then hopefully as we get more efficient and more productive per capita, your dollar buys more stuff. So it's actually like reverse inflation, and you should just be able to hold money and not become poorer over time. I mean, it seems like if you ask like a sort of an engineer or like a computer science person to just like, who hasn't been in touch with the current world, hey, design the right inflation rate for this world or the right monetary system, I think they would just say fixed amount of money and then let the market determine, right?
Right. And look, there's a ton of literature. Yeah, there's a ton of literature on this, and like people who, the macroeconomists and all these academics will basically scare you and think, well, we're going to these deflationary cycles where the whole economy and all banks will collapse, and it has happened before. But I think they're basically like scared of failure. Like, they want to have a system where banks just can't fail. There's always going to be a lender of last resort. And to have a lender of last resort, you have to have someone who can print money. And then once you have someone who can print money, it's very easy to create a system where always they're constantly pushing the reset button by, creating constant, at least 2% inflation or more. Actually, real inflation is probably a lot higher, right? But the point is that the state having control of money, in my opinion, is leading to so many of our problems that we it's hard to even think about like all this we have with woke nonsense and wars and like an entitlement state that's like out of control. All this stuff is just linked back to the idea that the government has the ultimate power to just expand the money supply whenever they want to, however much they want to. And we can't stop them. And until we can stop them, none of those problems are going to change. Anyway, I'm sorry, Jared, I cut you off. Were you going to say something? My bad.
That's fine. I feel like one of the sort of consistent sort of message that I hear when it comes to interest rates and the Fed and all these kind of things is like, well, it's really hard to do the other thing. So let's just continue kicking the can down the road in this direction because we're just used to it.
Exactly.
We're really good at kicking the can down the road. So let's just make our can kicking down the road mechanism more efficient over time. And it's like, well, maybe, our value wouldn't deflate, or sorry, not deflate. It would not like, your purchasing power is getting lower and lower and lower over time, which means you need to be more efficient over time, or, get closer to the money printer, right? Like there's all these kinds of research just basically saying whoever's closest to the money printer will make the most amount of money over time. And people who are furthest away from the money printer will tend to fall further and further away from sources of value and value accrual. And, if we just had a fixed money supply, then like the people who are good and innovative, like anytime something gets hard, the innovative people come out of the woodwork and find ways to make things more efficient. So, I'm an advocate of just however you want to call it, going cold turkey, or just, pick up the can and throw it in the garbage. You're muted.
A couple of quick thoughts.
Jeff, you're muted.
Quickly. Any prediction an economist makes needs to be like very heavily discounted. The economy is a complex dynamic system with nonlinear relationships. Chaos theory applies. And just like we can't, even with really good science, predict the weather out more than, a few weeks, it's like that, but even much harder because predictions about the market impact the market. So you imagine if the weatherman said, hey, we think it's 80% chance of rain tomorrow, and then that impacts the chance of rain in ways that are unpredictable. It's incredibly hard. I do think that as far as optimal inflation rate, it seems likely to me that really high inflation or really high deflation is going to be really problematic. Because very high inflation, people will save almost nothing. You want to spend as quickly as you can. Very high deflation, people will save a lot and consume very little. And it seems likely to me that like a healthy economy is going to have like, you know, the average individual have maybe like a 30 to 50% savings rate. So you have, you know, this resilience against economic shocks. And there's also that savings turns into long-term investment, which is good. But if you go way beyond that, then, you know, very low consumption has its own problems as well. So I don't know, plus or minus 3 or something. I don't know, something like that. But it is hard to say.
Yeah, the whole point being like, we can't decide. Just let the market decide, right? It's like saying, put the government in charge of making the best possible smartphone. What outcome would we have? Probably something worse than we currently have, right? Like, let's just let the market decide, right? Anyway, okay, listen, that was supposed to be a short market update segment. Let's move on to some crypto topics. In the last few weeks, probably the most interesting thing that's happened is the World Liberty Financial token becoming tradable. So just real quick for anyone who doesn't know, World Liberty Financial is essentially it's like Trump's family crypto project. It's probably the best vehicle for Eric Trump and Donald Trump Jr., who are heavily involved with it, to build their fortunes, you know, beyond, their father's company. It actually launched in 2024, like before the election, which is kind of gutsy because if the election had gone the other way, I'm sure it would be mired in lawsuits from, you know, whatever Democrats would be in charge. And at first, when they started talking about it last year, it just looked like it was going to be a fork of Aave. They denied that. They said it was going to be more than just that, but that was the first thing they started talking about. And since then, the team has kind of broadened the ambitions. They've moved into stable coins with a stable coin that's called USD1, I believe. They are promising some more innovations in borrowing and lending besides just Aave. Probably they're going to take forks of other things as well and slap World Liberty Financial brand on it. They're talking about doing something in the DEX space. They want to be a bridge between kind of traditional finance or retail and crypto rails. In many ways, to me, World Liberty Financial feels less like a focused like protocol and more like just a brand extension strategy, like that you would expect from the Trump family. You know, they kind of put the Trump name and on whatever kind of crypto stuff starts to gain product market fit. But at least to me, like the project serves two powerful purposes, which you guys please add to this after I'm done explaining. So the first one, which people are really upset about actually, is that it creates this like for-profit channel for the Trump family to like kind of extend their wealth and influence. Like I bet the two Trump sons are like, this is our shot. Like, this is how we make it really big. Like, that's the first thing that it's really doing. And the second one, which is actually a positive in my view, is that it creates a huge signal to every builder in the States, right? It's like, look, if the president's own family is building in crypto, it tells ordinary people who are building in crypto and entrepreneurs, like, dude, it's safe for you to build. Like, these guys launched a Trump coin. They have like Trump trading cards. They now have World Liberty Financial. They're like making like, you know, it's okay for you to build. Like, you're going to be fine. You know, as long as you don't do anything like obviously criminal, like just go build stuff. It's going to be okay. Like, this type of signal is very hard to quantify the impact of that, but I do think it has a significant impact. And one other thing I'll say is, of course, the project is surrounded by controversy already because many investors bought it like a small fraction of, like, I think they bought it like half a cent or a cent, and it initially started trading at like 30 cents. So people have been tracking wallets. Wallets are sending tokens to centralized exchanges and dumping. I think it's trading at like 16 cents now. So a whole bunch of people made a ton of money and retail is losing money. So there's definitely like a lot of controversy and negativity about it on crypto Twitter as well. But anyway, have you guys been following this story at all? What do you think about World Liberty Financial, where it could go? Have you guys had any conversations with the teams at all? I mean, they are kind of in the stablecoin space and you guys are in the stablecoin space. Anybody?
Yeah, I followed it. I'm not an investor. Corey from Dolomite, he's a great builder, is an advisor over there. He's a really great builder. I think we're unlikely to see some like new DeFi primitive come out of this. I do think it's more of like a brand thing, and where they'll be most likely to succeed is if they do a really good job on partnerships. They have been seeking to partner with some of the biggest DeFi protocols and get a lot of initial liquidity, et cetera. I saw a really interesting conversation with, I think it was Eric Trump, where he talked about some of the motivation here. He was pointing out that like most of the Trump family during the Biden administration got debanked, even though they are rich and powerful. And so I think that kind of was a convincing factor for them of like, hey, there's value in these permissionless systems because, if you're, a political opponent of whoever's in power, they have the power to lock you out of the traditional financial system. And DeFi, that's harder to do. So I thought that was pretty interesting. And I agree with you that there is the positive signaling of, hey, if he's building here, it's safer to build here than it previously was.
Yeah, I mean, do you guys actually feel that way? Because I know I don't want to dox you guys, but you're an American, right? How do you feel about that personally? You're building in the space when you see
I think it's safer than it used to be. I think it's safer than it used to be.
And this serves as a signal for that, or not really? Am I just thinking about it too much?
The Genius Act, the removal of Gary Gensler, several things together have kind of indicated that the biggest thing is there's just been the removal of the max aggression against crypto because Gary Gensler was suing all of the good actors and leaving all the bad actors alone. Gross abuse of power in a lot of those suits, if you look at the judgments, and a lot of arbitrary and capricious kind of decisions. Also, if you look at some of the judgments. And then there was the whole kind of shadow attack, which was Operation Choke Point, where financial regulators were basically pressuring banks into debanking anyone employed in crypto. And big, major kind of crypto founders, good actors were getting debanked. The removal of all of that is the biggest thing of all. And then Genius Act is another thing. And but then also, having the Trump family build, I think is a signal that it's safer than it used to be. And so I definitely think there's a number of things that are kind of positive signals as far as like, hey, you can build here without the government trying to destroy your business. I would say this is one of them. It's not the biggest one of all. I'd say just the removal of Gary Gensler is probably the biggest one.
Dude, let me ask you can I just ask your guys' comments on this thing? Look, a bunch of people bought this token at a really cheap price, like basically half a cent, 1.5 cents. And they're making bank, even though it's down, 50% from where it launched. They're still selling it like a 15, 20, 30x, right? What do you guys think about this model, right? Is it going to kill the project? Like a select few insiders bought this thing super cheap. They're dumping it on the market. Presumably they're earning millions of dollars and they're dumping it on retail's head. Does this kill the project at the very beginning? Does it create a bunch of ill will that is difficult to overcome? Or is this just price discovery? This is normal for all projects. And in like a year or two, what really matters is what the project actually does. What do you guys think about that?
I mean, it's the problem that every crypto project has, right? But I would actually go with the latter. I think we're going to find out over time if what is the price of this thing, and maybe it's zero and maybe it's very high, and it's going to depend on the underlying business. So it doesn't really matter, but is it the right go-to market to, the way that they've priced it and have come out with it? That's a good question to ask.
I think it'll probably do well over time. Mostly just because I think whatever they're doing is probably very well planned out. And if they're going to have some, quote unquote DeFi integrations, partnerships, yield opportunities, what have you, like it'll be something that people will be interested in buying just because of the brand association. And also, I think there's a lot of, good that comes with it. It's a sign of good things to come. I think it's also kind of grifty. It's like it's.
By the way, I love how the whole panel just went like, yeah,
exactly right. Like,
yeah, sure.
It is crypto. If you remember their tokenomics, they were planning to allocate 70% of the tokens to insiders, and then they got a bunch of backlash. A bunch of people didn't like that idea, obviously. And then they came back and they did a token sale to accredited investors where, now something like 60% of the token supply is going to the public sale. Well, in my mind, they revealed their initial intentions. And the only thing that they did was they found the buyers that they wanted to get. And instead of assigning 70% of the tokens to those people, they say, hey, come back in a couple of months. We're going to do a token sale. You'll get your portion. You can buy it at the price that we're going to say is a good price for you. And it's a public token sale. There's probably not a whole lot of, actual public buying going on. Obviously, some people will pile into it because it's a big brand name. They've got a lot of money and they have a lot of opportunities. But I think the most effective thing that they've managed to do so far is to be labeled a DeFi project. Because when you go and you look at the news articles talking about this thing, they label it as a DeFi project. But there's very unlikely to be a whole lot of decentralization happening with this project. So,
well, forget about decentralization. It's like there's nothing DeFi about the project yet. I mean, they're promising to build like some, there's a stable coin. They have a stable coin. They have a token, WLFI, and everything else is basically like coming soon.
Right.
So,
it's basically to say that, USDC is a decentralized project because you can buy it and you can mint it. But the thing is entirely owned by Circle. This whole project is owned by a corporation that's based in the US. It's a Delaware company. And they're going to do what they want. Obviously, they've got their insiders that they like. They're going to make probably a decent amount of money just because of their exposure to, DeFi. I do think there's maybe a slightly negative aspect that could come along with this, where there's a certain, lump of money that may currently be situated in actual DeFi protocols that's going to move over to this and now be kind of, locked up in this sort of closed off ecosystem. And I think this is my last point, that it kind of signals a general trend towards, what was actual DeFi having this shift towards the institutions getting into crypto. They're seeing all the signs of, the market is warming up to DeFi and crypto. And so now they're trying to just grab their share and see what they can get and see what they can extract out of it. I'd be lying if I said that I don't see something similar to kind of what we saw with 3 Arrows and all of the other things that blew up a couple of years ago, potentially rearing its head again in the near future, because these people are addicted to the money casino, right? They're going to take, leverage trades with your liquidity and they're going to see how much money they can make out of it.
You're wandering into just skeptical doomerism. I don't know. This is nothing like Zero's Capital. What? Yeah, I don't know. But anyway,
right? It's on brand for Jared. This is Jared. Let's let him be Jared.
Would you say that it's unlikely to see more crypto blowups like we saw with 3 Arrows Capital again in the near future? I'm not necessarily saying that World Liberty is going to do that, but there are more of these big, sort of institutional plays into crypto. And they're only doing it because they see the money potential here, right? They can make huge yields. They can get tons of deposits. They can make a bunch of money. And so if they're doing that, they're not truly decentralized, right? It's not like their structure is a little opaque. So they can essentially do whatever they like. If you go in and deposit money to get a stable coin or whatever it is, their mechanism for minting, right? What are they going to potentially do with that money behind the scenes? They could do something safe, like put it into bonds, but they could also go and do something very, very risky with it.
I think 3AC was a very different beast because they were a hedge fund playing with a lot of leverage and lying about it and doing things that are I think doing a lot of things that are unlikely here with World Liberty. A couple of quick thoughts before we move on. I think it's just unclear whether it's good strategy or bad to launch a token at a high FTV. Because, you could say, hey, if you're going to be giving out the token to incentivize usage, you want it to be at a high FTV. But if you throw it out at a very high FTV, then maybe there's just going to be more downside pressure, and then that can hurt sentiment, et cetera. So if you launch it at a lower FTV and you have a positive price in the chart that helps sentiment and mind share and interest, and the community loves you more. But I don't really know what's correct here. So I don't know if anyone really does.
Well, can I interject one thing? Like the really big success story of the last 6 months to a year is Hyperliquid. And basically the people in crypto who are really happy right now is anyone who got a decent Hyperliquid airdrop and just held on to it because they got it at a low price. What did it start trading at? Like $3, $4, $5, something like that. Now it's at like $40, $50. Like, you know, like those guys are super happy, you know? So, okay.
Yeah.
All right.
Good upside helps with sentiment for sure.
Okay, let's move up. Let's move on to the next topic. So okay, JF is telling me that he has a bunch of stuff to get to. So maybe two more topics. First, let's talk about Hyperliquid since we kind of transitioned to this already. So one of the wildest stories from the past few weeks was Hyperliquid. So I'm not really sure. It's either one whale or maybe a group of whales, maybe one really big whale targeted the pre-market for a token called XPL, which is a Plasma's token. Plasma's I think it's like a new Bitcoin EVM chain, something. I don't know what it is. But anyway, its token XPL was trading in pre-market on Hyperliquid and a few other places like Binance and some other centralized exchanges. But because on Hyperliquid, the market was so thin, the whale was able to basically pile into buy it with millions of dollars, like millions of USDC, and push the price from I forget, it was from 60 cents to almost $2. And when he did that, he triggered a massive short squeeze. Okay, the thing lasted just a few minutes, but I think $100 million in shorts were liquidated. Some individual traders on crypto Twitter I saw lost millions of dollars, while the whale who bought a bunch of the pre-market tokens, basically the way the mechanism worked was he just would buy. And anytime people were getting liquidated, Hyperliquid system makes it so that he automatically, the long just sells at those really high prices, so he basically locked in these huge gains. And what's really crazy about it is that on Binance and wherever else this thing was trading, the price barely moved at all. So it was basically rock solid at 55 or 60 cents. So if you saw something like that in TradFi, it basically just looks like market manipulation. It looks like someone cornered the market in a specific venue and that it wasn't really working very well because of the low liquidity. So Hyperliquid said that its liquidation engine worked exactly as designed, but critics online, of course, especially people who lost money, are explicitly calling it market manipulation. So anyway, so here's my question to you guys. This whale or group of people, I'm not sure, who executed these buys and short squeezed everyone. Do you think that they did this thing on purpose? Was it they knew what was going to happen? That was an attack, or were they just some guys who were fat fingering and basically mauling a very low liquidity venue, not realizing that they would make a ton of money? What do you guys think? Did you follow the story?
I did. Yeah. It's hard to tell. I've heard rumors that I don't know if they're substantiated that it was Justin Sun doing it. What's interesting about that, if it's true,
I think that was refuted. That was refuted.
Was it?
Yeah.
Okay. There was going to be a weird, because Tron is kind of a competitor to Plasma. And I'm why is he pumping Plasma? But okay.
Who knows, man? Who knows what that guy's up to? Whatever he's doing, he's making lots of money. He made $750 million on World Liquidity Financial, by the way. So he's doing something right.
He's their biggest investor, I believe. So outside investor. So, couple of things. I don't know if it was intentional manipulation or not. I've seen a couple of interesting takes that I don't have a strong opinion on, where the Lighter team, they're this up and coming Hyperliquid competitor that's built on a ZK L2. They kind of said, hey, here's some reasons why this wouldn't have happened on our platform. They do some things to kind of create, mitigate manipulation on kind of low float newer tokens. You can go and read what they said. I thought it was an interesting take. The thing I find most interesting about the whole thing is it's kind of a common strategy these days for someone who's captures a bunch of airdrop points or feature airdrop or whatever, that says, hey, I want to lock in my gains, but these things are illiquid. And so one way to do that is if there is a market like this, they can go short the perp to hedge this token. So a bunch of these people who are trying to lock in gains by shorting the perp, they all got liquidated. And so I think
it's a meaningful amount of money for them, right? They finally got a winner and now they got freaking blown out of their shorts, right? Yeah.
Yeah. So I think that is going to probably affect the future market of like, oh, there's some future airdrop, and people who had this like old playbook of get a bunch of this future airdrop, but then, short the perp and use that to lock in some gains and things. I think people are going to be probably a little bit more afraid to do that, at least on Hyperliquid, unless they implement some changes.
Well, they implemented some changes. They said that they're going to like reference Binance and some other venues, so they can't have that much of a mismatch in price, allegedly. I don't know if they actually made the changes or not, but they announced
that helps some. But if all of them are thin liquidity and manipulatable, or they're the only venue or whatever, but that could change investor behavior, where a lot of people who are farming airdrops say, we can't use this as our strategy anymore. And so, maybe fewer people do that, or they just do it in a very different way. There are other ways that you can, pre-sell airdrops. You can just go find OTC people. You can, go find a buyer. Or there's like Whales Market that allows you to sell upcoming airdrops, et cetera. So I don't know if more of it moves in that direction, or if people get just more comfortable with Hyperliquid because of the changes they implement, or they use lighter or whatever. But I do think that it could have an impact on that specific investor behavior, which is like this there's like this whole big industrial machine around airdrop farming and locking in gains and all those sorts of things.
I'll just say no crying in the casino.
Okay, yeah, that's a little bit how I felt. It's like they make you like, I don't know if you guys have ever traded on Hyperliquid, but there's like, it's disclosure city over there. Like it's,
Well, they make you they make you sign and agree to those disclosures for a reason, right? Because anybody can go to a perps market and see like open interest and, all of the stats that you need to know to figure out like, where are people buying? What is their, average, buy-in prices? If you move the market so much, like you just like a good quant can go and look at this market and say like, I can liquidate this many people if I move the market this much, right?
That being said, dude, if I shorted on Hyperliquid and I got blown out because the price went 3x and it didn't move at all at a place like Binance, I'd be like, what the man? Like, I would definitely make some noise about that. Like, okay, maybe that's what I agreed to when I clicked the legalese nonsense when I signed up, but like obviously that's not how I expect or anyone would expect it to behave, right? Like it should be, right? Come on, like, and I think and Hyperliquid, I think like acknowledge that and is making some changes to change that behavior, right? So
I think they have to acknowledge it because it just shows that maybe there's thinner liquidity on this exchange than others, but. If you take a short, you put yourself at risk. If you don't want to be at that risk, don't take that short, or at least cover yourself with enough, collateral, have a stop loss. Like it's surprising how many people get into these exchanges and make these huge trades and they don't have like a stop loss for their trade.
Well, if in this case, your stop loss is how much margin you post, but I know what you're saying.
That's your automatic stop loss because that's just where you're going to get liquidated, right? But you can say I'm willing to lose 20% on this trade, and if you lose 20% on the trade, you just close it off. Obviously, you have to stop limit. I think it's just the fact that people are not comfortable eating a loss like that in their trading portfolio, so they're just like, well, I believe in it, so it's not going to go up if I'm shorting it,
To me, this is just another example of DeFi basically speed running all the mistakes of TradFi. Like I'm sure like in TradFi, if I look back in history, I'm going to find an example of someone cornering a market, not in perps because perps were never big in TradFi, but like cornering a market and creating a short squeeze where shorts got really upset and then they implemented some changes. Like we're just speed running all the same bull TradFi went through. Like that's kind of how I feel about it. Okay. All right. One more topic and then we'll wrap up. So this one's kind of interesting to me because it kind of affects this podcast a little bit because we'll talk about it. But anyway, ZachXBT, which is he's like a huge crypto influencer and kind of like tracks down lost money and shines a light into crypto where often people don't want any light to be. But anyway, this past week he dropped like this Twitter thread where he showed like a price sheet of over 200 crypto influencers who were paid to promote various token projects. but almost nobody disclosed it. So the leak included pricing tiers where people got paid anywhere from a few $100s to I think the biggest one was $60,000 for a single post. And shockingly, of all the accounts that he showed had accepted deals, only 5 or 10 of them or something labeled their posts as sponsored. So this raised, of course, a bunch of ethical flags and probably some legal ones too if you're in the US, because you can't just shill tokens, right? Anyway, it's kind of a stark reminder that the stuff that you see on crypto Twitter, you have to be really careful. People are shilling all the time. But the reason why I'm mentioning it is because, we're doing this podcast. We talk about tokens. We often talk about tokens that we like, that we own. And of course, we don't get paid anything. We don't have any sponsors. The four of us split the cost of the podcast production costs. And one time, someone contacted us to be on the podcast, and we're happy to have them on the podcast, but they asked us how much should we charge to have them on the podcast. And Rhett said something funny. I'm going to steal your line. Rhett was like, we charge $0, but we're willing to negotiate. But anyway, this story was kind of interesting to me. Just look, all that you see on crypto Twitter are people talking about tokens. Probably all of it, unless you personally somehow trust the source, is shilling you a token. So you really got to be careful. And they're probably getting paid for it. I mean, I'm not I have 100 followers on X, and I've been offered money to shill tokens. I've never accepted money to shill tokens. But and if I'm with 100 followers, if I'm getting asked, you can guarantee those 1,000, 5,000, 10,000 people follower Twitter posts, Twitter accounts, they're definitely getting paid or getting offered to get paid. So you just have to keep that in mind. So anyway, any thoughts on this, guys?
I don't think I've ever been offered to get paid to shill a token.
That's because you don't respond to messages. That's why you probably got messages and you didn't even realize it.
My Twitter DMs, they don't show unless I already follow you, and I don't go comb through the hidden messages very often. Yeah, maybe there's one in there. Who knows? Probably not. But the thing that I found most interesting about that list, because I read through the list when he posted it, was crypto Twitter has gotten so big, I don't think I recognized a single name on the list.
That was exactly my takeaway. I looked through every name. I was like, is there any name here that I actually trust? And the answer was no. That's actually a great point. Yeah.
Not only that I don't trust, I didn't even know who they were. It's there's just so many pockets of this. I follow a lot of DeFi related stuff and people. I don't follow a lot of accounts that are hey, buy this new meme coin or whatever.
Here's a good question,
so
Rhett. How many meme coins do you own?
I own a very small amount of one. And I didn't even really buy it for because I thought it was going to moon. I'll tell you the one I bought, by the way. Literally hardly any, a few dollars. I saw the interview on Unchained with Iggy talking about Mother. And it was a funny interview and she was likable. And I'm like, I'm going to buy a couple of bucks of Mother. I've never bought any other meme coin. I haven't even looked to see what that ever did. I have no idea. And so I have no problem with meme coins, and I know people who do really well on them. I have a friend who's done really well on meme coins. He's good at kind of seeing where culture is moving. It's just not something that I do. But yeah, it's just crypto Twitter has gotten so big and broad and vast that it's you can have a list of 200 influencers and I've never heard of a single one of them.
Right.
So
yeah. And by the way, I should mention, I'm totally okay with people getting sponsored to post stuff. That's okay. It's just about disclosure, right? I think just as a public service, if you're looking at anyone posting content about a coin, anybody, just assume they're in some way getting paid. You should assume that, even if they're not disclosing it.
I mean, I think an even better practice, and I'm going to repeat myself from the last segment and just say again, no crying in the casino. This is just another version of the casino, right? Probably the safest bet in crypto is to just by default assume something is a scam until proven otherwise. And if you do that, you're very unlikely to actually be scammed by, some pump and dump meme coin that was just a bunch of insiders got paid to do it, got pumped up. And then all of a sudden it's, trading at 2 pennies, right? it's absurd how common this is at this point, and it's even more absurd how common it is for people to continue falling for it. To the point where, like, obviously I have, sympathy for people who get, pulled into these things, but it's hard to continue having sympathy when it's like this happened, over and over again. Anyways, I'll leave it at that.
Okay. All right. Well, I have like 17 more things to get to, but JF is telling me to wrap it up. So, okay, we'll try to record again next week. Sorry, we were gone for a few weeks. Thank you for listening in. And again, if you guys have any topics that you'd want us to discuss or changes you think we should make to the pod, please reach out and let us know. Okay, thank you so much, and thank you for listening to the DeFi Podcast. Talk to you guys soon.